What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 16th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to try to answer a big question. When is it time to go long crypto? When is it time to essentially buy Bitcoin, buy altcoins, and get as much exposure as you reasonably can to the cryptocurrency space? And it's not so much a question of fundamentals. And no matter if you're bullish or bearish, I feel this video is going to be helpful to you, because no matter what drives your opinion, I want to simply express today what lets me know when it's time to go long. And it's one of the most time-tested metrics that is going to help save your rear end when you're trying to make smart investments. So without further ado, let's go ahead and kick it off. If you guys happen to enjoy the video, consider dropping a like, and let's go ahead and kick off the rambling. All right, I want to start here by talking about the fundamental element, and then we'll dive into some price levels that we could be looking for some different cryptocurrencies and altcoins. Now, as many of you know, we sold our positions back around this period of time in August of 2022. We got out of crypto around that time, and since then, altcoins have declined another 33%. So we were smart going to cash back then and essentially predicting that there was going to be more further downside and that a bear market bottom was probably going to take some more time. But a lot of you might be wondering, Nick, how did you know essentially to kind of take some chips off the table? How did you feel so confident at that time to basically take advantage of the relief rally and go into cash? Weren't you afraid of missing the next bull market? Well, there's always a chance that stuff like that can happen. There's always a chance something can take off. But if you lean into some valuable metrics, you'll start to realize just how quickly and easily it is to predict whether or not we are in a new bull market or we are in a period of stagnation and decline. And that indicator we're going to be talking about today is liquidity. Now, you guys have probably heard me talk about this on this channel. I bring up the topic from time to time, but I really want to signify today with the data, with the price action, just how important this topic is. It gets brushed off because people think it's just some kind of arbitrary number, but it is the fundamental element that is going to drive prices higher in the long term and help us answer a question, the big question on our minds. When is the new bull market starting, right? Because again, you may like fundamental developments going on for certain projects. You may believe that some narratives are forming in the market. Doesn't really matter when it comes to the valuations of assets, the premiums people are willing to pay. It has to do with an increase in liquidity, not just from the Federal Reserve and the other central banks of the world printing new money, but more particularly in the crypto space and the kind of microsphere. We need to ask whether or not stablecoin liquidity is expanding. Now, I understand many would argue that, Nick, people just sometimes buy with dollars in their crypto exchange account from transfers from their bank, and that's true. That's a part of the market. However, we tend to find here that that number tracks very accurately with the broader and more established on-ramps, which are the stablecoin on-ramps between USDT and USDC. Now, I want to let you guys know before we dive into this any further how you can track this on TradingView. It's very simple. All you have to do is go into the symbol search, type in USDT, click the down arrow on your keyboard, click plus, and then type in USDC and go down until you see the one with the market cap and the dollar sign. Press enter, and voila, you've got the chart that I've got. But what we're going to be doing here right now is not only analyzing how stablecoin liquidity was expanding from, say, 2019 here towards 2022, where it flatlined and then started a trend of declining over the past year or more within price action, but I want to go a step further. I want to show you guys why this is such an important metric. It's one thing to say, okay, yeah, stablecoin liquidity is contracting here, but what kind of effect does that really have on price? Well, again, let's go ahead and do something that a lot of people aren't looking at. A lot of people aren't looking at stablecoin liquidity, but they also aren't they aren't taking a look at this. Our custom altcoin metric, which we just demonstrated earlier, this takes total 2, which takes all of the market cap of the crypto space minus Bitcoin. And what we're going to do from that point on is we're going to subtract the market cap of USDT, USDC, and Ethereum in the exact same way we built the USDC and USDT metric, right? It's very simple math. We're essentially getting the real altcoin market, right? Every play from BNB all the way down to your favorite meme coins. That's the metric we're tracking here. Well, if we track it alongside liquidity in the crypto space, you will get a startling correlation between these two. And it's to the point where you can't say, oh, correlation may not equal causation. Guys, this is a really stark comparison here. within the sense of performance. Let's take a look at it here. Now we're going to put the chart on log here, which might make it look a little bit funky, but this more specifically showing the accelerative period in altcoins, which really came here in 2020 to 2022. But let's just kind of go through the chart here. Notice how when stablecoin liquidity during these periods of time, right? We're just going to kind of block it out here on the chart. So we'll go ahead and get the rectangle tool here, right? During these windows of time where liquidity is relatively stagnant, right? It's not doing too much. We can generally see that price action also during that same period of time. Now watch as the line tracks across the screen here, right? Generally speaking, altcoins don't really do anything, right? It's a period of relative slow growth in price. If anything, it's declining more specifically, or just stagnating and moving sideways. However, when we get these periods of acceleration and liquidity, when we see massive increases in the amount of dollars in the overall crypto ecosystem, well, from that exact same period of time, we see a massive acceleration in price towards a new higher band, right? We can generally see that the vast majority of price action came into this period of time. Stablecoin liquidity from that period of time expanded from roughly $5 billion up towards around $135 billion. That is well beyond a 25x in stablecoin liquidity. The amount of dollars circulating in the order books, potentially buying up crypto assets and pushing valuations higher. And we find, if we look back at the history even beyond this in prior bull markets, TradingView doesn't have access to it here, but we see that there is that increase in Tether as it became a growing player and tool within the crypto space since back in 2015. Now look what happens here when liquidity starts to flatline. We see a decline here in the amount of stablecoin liquidity yet again, or practically no growth really on the logarithmic scale, but about $20 billion or more knocked off from stablecoin liquidity. Well, what happens to prices? We start our first serious substantial decline from this upward distribution phase and really start to, again, stagnate when it comes to price action. Could it really be this simple? Could it be as simple as asking the question of whether or not stablecoin liquidity is expanding? The answer is yes, especially if we track the more risk-on plays. This is what I think a lot of you are interested in. I understand many of you are saying, no, Nick, I'm just interested in Bitcoin and Ethereum at this point, especially with the regulatory environment that's going on. And hey, that's fine. If you guys are more focused on Bitcoin and Ethereum, that's okay. But don't doubt the reality that while you may be excited about ETH2 and proof of stake versus proof of work and EIP 1559, or you just like Bitcoin because you feel all the liquidity is going to go there now because the altcoin market is getting toasted by regulators, and you just like Bitcoin from a fundamentals perspective, doesn't matter. I want to be very clear about that, guys. You may love your positions you're holding. You might have a lot of people telling you that it is guaranteed to go up. $1 million Bitcoin is in the future, like Balaji was saying back a couple months ago, and is now saying was just a marketing campaign. There's a lot of people out there telling you the optimistic side. I'm going to tell you guys the realistic side here. And as a friend to a friend here, I'm not here to be negative, not here to bash you guys. But just because you love something doesn't mean it's going up. Just because it went up in the past does not mean it's going to go up. If we cannot fix the issue of stablecoin liquidity, which has currently been declining for more than a year and it's now been stagnant, if stablecoin liquidity does not expand, valuations will likely stay where they are, or they will correct. I don't mean to speak as a monolith of truth or opinion, guys, but liquidity is the mass. In the same way that over the last decade, the Central Bank of the United States, the Federal Reserve, and the ECB, and the Bank of Japan, and the People's Bank of China, all these global central banks were expanding their balance sheets, and that was the reason for a decade-long secular bull run. Right? Minus the typical innovation, routine, processes that happen. There was definitely a lot of great innovation over that decade, but a lot of it was advent or able to happen due to the broader balance sheet expansion in the broader economy. It is no different here in the crypto space here. And when you've got global liquidity contracting, that's a problem. When you've got stablecoin liquidity contracting, it's time to run for the hills. It's time to be defensive. It's time to set higher standards for where you're going to start getting bullish on price action and be protective over your capital. Because we have not only got contracting liquidity here, but but we've got a lack of fundamental narratives in the space, a lack of development and optimism. We've got investor sentiment is shot. Market makers who provided ample support for a lot of these altcoins in the crypto space to continue holding their price and accelerating higher, they are now out of the crypto space. They've tapped out. We just had another crypto fund dump billions of dollars of their positions on spot markets practically overnight. And you've now got the topic of regulators coming into the picture. This is not a good look for the crypto space. And while I'm also going to say something very optimistic here, which is that all of these things are likely not going to stop crypto, at the same time, they can take much longer to play out, as we talked about since back in August of 2022. It's going to be coming up on a year since we sold our positions and we've taken more of a bearish narrative. And I know that it can seem rudimentary or, really kind of sometimes not so entertaining, but it's not about being entertaining, guys. It's not about, enjoying trading and feeling like you're going to be Jordan Belfort or, the Wolf of Wall Street. It's about knowing how to make money, right? You guys want to be able to preserve and protect your capital. You want to hedge inflation. You want to ideally find some of the easiest ways to make money in the market. Well, in order to do that, and it's totally rational that you want to do that. In order to do that, though, you got to be particular. You got to be protective of your capital. It's not about what opportunities you can afford to miss. It's about what you can afford to lose. And there are a lot of ways in crypto to lose money. Trust me on this. Now, we've obviously seen Bitcoin has been declining since April. And because of that, valuations in the crypto space have also followed suit. But once more, we need not look further than the BTC ratios to see that altcoins are performing abysmally right now. They're continuing to decline here for the past quarter and are looking like they've got some substantial room still to go lower. For example, let's take a look at Uni. This was one of my favorites in the last bull market. Uni made a major acceleration. We built our entries here, kind of rode the wave up towards here. And to be honest with you guys, we really got kind of stuck in the position. We held it for a long time, but we got out here right around the middle here, probably in the lower end of the middle here in July, basically around $7, $8 per Uni token. We bought in originally, I think our initial position was around $1.50, $2. So we still made great returns during that period of time, right? Nothing to scoff at, it's a huge multiple. But again, when we're taking a look at when it's time to get long, like we were getting long here when we started to see this double bottom, we got really interested in this kind of sideways pattern after the kind of initial listing. Anyways, put that aside here. We've got a line of support between the prior lows. Now, I want you guys to try to ask a question here, right? Do you think Uni will hold at this price level and continue accelerating higher? And perhaps maybe the chart and the price action gives us some cues to know whether or not we're ready for that next upswing, even if it's maybe a minor relief rally like we saw back in June. I want you to take a look at the chart here, and I'm going to share a piece of advice here, but just take a look at the chart here for a moment. The first thing that I focus on here when I look at these potential lines of support is I don't try to buy exactly on those lows. If you want to be a more aggressive trader and have like a nice stop loss, fine. But what I look for here, I'm not worried about capturing that first major move off of that support line. Right? That's a fraction in the grand scheme of things. What I want to know about is the momentum showing up to the party, the first players who are chasing that dip buying opportunity. Well, let's take a look here what happened back in December 2020 when we revisited and started to form this first low. We had a 22% move, followed by about a 6% move to the downside, or practically neutral move here on that breakout. And then afterwards, 55%, 53%, 43%. Optimism was flowing in to plays like Uniswap or Unitoken. Well, let's take a look here in the relief rally. Again, this was a relief rally now in hindsight, which we were believing was a relief rally at the time, but a lot of people thought it was the start of the new bull market. It was the absolute lows, and people were chasing the opportunity. Price went up 33%, 30%, went neutral about minus 4% for a week. Then it went up 17%, 11%, another neutral week of minus 3.9%, and then 11%, and then 6%. Wow, talk about a really big move in a short period of time. Understandable why that relief rally deceived a lot of people. Uni, in this case, went up more than 2x during that period of time against Bitcoin, not to mention Bitcoin was moving higher. So are we seeing anything like that now? Well, let's take a look here. This time, we actually collapsed through the line of support here. It doesn't matter how you really draw it here. You can even take the absolute lows here. We still went below that line. And people drove up price here, and we went up about 11%. Not to mention, the candle here is starting to fade some of those gains we had. We had probably a little bit more, but people are taking profits here. It's a relatively weak response, versus what we've seen historically, like 22% or 33%. And the question is now not so much about, man, where can price really go? It's a question of, hey, are we going to be able to hold this line? Is there enough liquidity? Is there enough buy-side support to really, optimistically drive up prices and start a new move? Considering especially that we weren't able to do it back here, there was more optimism, and we cleared through a lot of the noise in the space, like Celsius and BlockFi and all that stuff. Well, price action will tell us, but it's telling us that the buyers didn't show up to the plate this time, at least nowhere near like they did last time. And if this line cannot hold, levels like the opening for Uni, like around 1,000 sats, or it's probably about 10,000 sats, but roughly speaking, we're talking about a 40% move from this point on, right? From where we are now. Excuse me, around 42% move. Got my math wrong. That's a huge difference, guys. And it may take a very long time to reach those lows. And it may take a very long time as well for price to actually start accelerating and kicking off. If buyers aren't coming here, when will they actually be satisfied and start building positions? That's the question you got to ask yourself. This is why, again, I recommend not going all in trying to buy the dip, timing the market. And it's also why with dollar cost averaging, you should get more aggressive into more capitulation and have your standards set high. Doesn't matter if you get your entire position filled in these plays. You shouldn't be putting all your capital into one altcoin, let alone, in this case, even if you have 10, 20, 30% of exposure to your favorite altcoin portfolio. If you time it right, you're going to make, huge multiples, historically speaking. It's not about getting the absolute low, and it's not about being overtly exposed to it, right? You already made great returns off of that alone, if history is telling us anything. Now, another thing as well, let's take a look at Cardano, right? Cardano, ADA token in this case, right, has been declining since August of 2021. Since then, Cardano has come down to its price point that is 83.6% cheaper than its peak against Bitcoin. Now, a lot of people would say, hey, Nick, that's below 80%. Isn't it time to go all in here into Cardano? Well, 80% was up here. And we just got another 24% move to the downside. Last week, we actually went a little bit lower than that, but some buyers picked it up a little bit. Well, let's, again, look at the response here after those kind of declines, right? We saw some bids, again, a lot of that was market or sell pressure. But again, we came back up here. And what's the next week's response? This has been starting since June 12th. Have buyers really come in here? Not really. They're starting to fade here again. Prices are moving lower. Now, I know some of you say, Nick, Cardano is the best protocol out there. There's Charles Hoskinson. They started to launch DeFi protocols and applications. And they're delivering on their promises. Shouldn't it go up? Well, no. If stablecoin liquidity isn't there, and if optimism isn't there, and regulatory concerns are growing, Cardano or ADA is not going to move higher. You may love it or hate it as much as you want. That is the weight, the mass of liquidity and its effect on markets. Now, take a look again. When we came down to this line of support in the past, we accelerated quickly off of these, even if it was there were short-term bumps and stuff, or really during the next wave of the bull market. Right? Cardano had a lot more optimism in that period of time. But we're not seeing that here. So I think we got to ask ourselves whether or not we can hold in this white line, this line of higher lows against Bitcoin. And if we can't hold that, what's the next level? I think you're looking at 500 sats to about 450 for the next level. And that's a lot of decline. That is over 50% here from where we are now. You gotta set your standards high here, guys. MATIC, same thing. A lot of you might be big fans of MATIC. You guys might use it as your premier layer 2 to get access towards trading altcoins for cheaper fees and doing DeFi services at a much higher throughput of scalability. And hey, look at this. We had a typical 70% decline like the last two. And some buyers did come in here and, kind of bring up prices as we typically see. However, it's the follow through there. We are down 6% here. What happened after we had a 70% decline last time? 42% move to the upside. What happened last time we were here? The week after, 9%, followed by another 22% move to the upside. Optimism came raging in. And even if it was short-lived, those are gains that you might want to capture. Well, what happened this time around? We did not see that. We are seeing downside. We are seeing price roll over here. It is keeling over and dying right now. There is no substantial buyer interest. And we're not too far away from the absolute wick lows down here on June 10th. Right? I'm not here to bash MATIC as a project. You may think the fundamentals are great. Some other people may think they're not so great. Doesn't matter. Liquidity is not here. And if liquidity isn't here, we're likely moving down to the historic line of prior support, which means that we're going to probably be correcting rather than 70% down to around 78%, down towards around 1,450 Satoshis here. Not a good look here for MATIC. And if it can't hold that line, then you got to ask the next big question. What's the next support level? All right, if liquidity hasn't returned to the space by this period of time when we reach these lows, where it could potentially go to? Well, it could potentially go down here towards 1,000 sats. That's where you start getting into the traditional corrective territory of 85 to 90%. And I know some of you will say that that sounds crazy. It sounds crazy, Nick, to say that Cardano could come here towards $4,500. Well, from the absolute all-time highs, that's a 92.8% correction. Want to know what happened in the last bull market? A 95.5% correction to the downside. We can take it back here, look at a whole range of different plays here in the market, and you will see similar patterns here. Altcoins typically correct. Even Ethereum in the last bull market, last bear market in 2018, corrected over 95%. 95% from the all-time highs. So don't doubt that history could repeat itself, not to mention with all of the regulatory scrutiny as well as the liquidity contraction in the crypto space. Now, the big thing here is this. A lot of people would rationally say, Nick, okay, look, there's a lot going against crypto right now. I think we all can feel that. But, and even if, there's a big difference between, say, an 85 to 90% decline or 90 to 95%, is it really about timing the bottom? I'm just looking to park some capital here, and I know in the next year or two, things are going to come back, things will get more optimistic, and these plays will still make great multiples, right? Is that so much of a concern to get in at the right price? And, that's a fair point. If we were in the last decade, I would say, that's a very fair argument to make. However, we're not in the last decade, guys. We are not going to be in a period of time, for probably a very long period of time, where cryptocurrencies continue just accelerating to the upside. Guaranteed. Because the Fed is not printing liquidity like crazy. And we bring it back here to the crypto space. Maybe the Fed is doing their own thing. Are stable coins increasing liquidity? Are on-ramps of new liquidity expanding the crypto space? No? Then there's no guarantee of it. And even if there is, even if we see a guarantee of stablecoin liquidity coming to the space, I want to bring you towards a play that we were early to. That is a great example of what I want to discuss here. Chainlink, one of the leading Oracle plays in the crypto space, we were buying big time around $1, $2 per token back here in 2018 when no one was talking about it at the time. It was an early stage project. And what do you know, during that period of time, we made a massive multiple on this trade. All right? And there was huge returns made on Chainlink as a play. However, it peaked out in August of 2020, and since then, has been bleeding against Bitcoin. Now, during the bull market, sure, maybe its dollar value came up to some degree, but it was massively underperforming Bitcoin, and it has continued to do so. If this continues to decline to, say, 1,700, this will have been a 90% decline from its peak against Bitcoin. And I've seen a lot of people ask me about Chainlink, from time to time. I get like a question every couple of weeks, like, hey, Nick, what do you think about Chainlink? You used to talk about it a lot, fundamentals are stronger, And the interesting thing is I understand where that confusion comes from, because Chainlink has had more adoption from this time window where it peaked in August of 2020 to here where it is in June 2023. This nearly almost 3-year window has had way more adoption for Chainlink than during this period of time. Maybe not in percentage growth terms, but in actual terms, right? And you would think that wouldn't price be at all-time highs? Or at least it'd be at a better point than where it's at now with Bitcoin, right? Well, it just doesn't work like that, guys. Similar to equities, all assets accelerate off of future expectations. Future expectations of growth. Future expectations of adoption and utility, more specifically in the crypto space. That's why it was the time to get long Chainlink when it was showing signs of optimism versus other plays during the bear market, and it was an early stage market leader during the beginning stages of the last bull market. But it wasn't the market leader throughout the entire throughput of the cycle. And sure, we're saying this a bit in hindsight, but it's a good thing to learn for the next go around. The things aren't just guaranteed to go up just because you like them, or they're maybe even being adopted, and there's some fundamental arguments that they should be going up in price action. It doesn't matter. If liquidity doesn't show up to the plate, And if liquidity's interest is not in that sector, you may be buying a deadweight project. Not to mention, it hasn't helped that Chainlink, and I will be a little bit more vocal here, has been unloading tokens, has been continuously increasing the circulating supply. And that doesn't help, right? That gets us back to the core question. Are there more buyers or more sellers? And if there are more sellers than buyers, prices will generally move down time and time again. That's why stablecoin liquidity is so important, because if we see an on-ramp of new liquidity, that means new buyers are coming into the space, new entrants are coming in, new liquidity, potential cash that can convert into those altcoin positions are accelerating. When the opposite happens, we see money moving out of the space. This means that people are likely unloading positions that they hold and are then taking that newly found cash they probably made great returns on that they entered in earlier on. They're now taking it out of the space. And those are dollars that are no longer going towards buying crypto. They're going towards buying houses. They're going towards buying everyday goods and services. They're going towards savings accounts earning upwards of 3 to 5% in either a savings account or treasury yield, or going into the stock market buying the next AI stock. Not crypto. This is why, again, liquidity is imperative to understand. I know a lot of you are thinking, Nick, could it be so simple? Could it be so simple that the time to go long Bitcoin and altcoins, and really kind of know when we're getting towards our lows when stablecoin liquidity is expanding or other liquidity-based metrics? I know it sounds crazy, guys, but yes, it is one of the biggest dynamics here. And while fundamental narratives, while real development, while use cases are definitely something we're watching for here, it plays a part in the equation. There's nothing bigger than liquidity. And we have been declining in liquidity since February. We're down $4 billion. And I know that doesn't sound like much, but it is a far cry away from the typical expansion we'd be seeing during this period of time. Bitcoin rallied 100% from its lows, and stablecoins did nothing. What does that tell you right now about the current regulatory environment and the sentiment around crypto, the institutional adoption that we're seeing? I've been seeing so many misleading statements around BlackRock and all these companies coming out and acquiring MicroStrategy stock and Bitcoin and all this stuff. Guys, those funds, because they're fund and managers, they're equity advisors, and they have huge swath holds over the entire equity space. Those kind of like short-term strong narratives, they fall under their own weight. They're not going out and buying it for some private client. They're buying it because they need to have weighted exposure to all equities through their funds that they run, their passive index funds. And that's going to require that they have some exposure on spot markets to names like MicroStrategy and crypto-based companies, right? There's no institutional optimism right now. If you were seeing optimism, you would see it through the stablecoin on-ramps. Plain and simple, guys. At least the hedge funds who have much more freedom, who are operating in the Cayman Islands or other offshore districts, would be loading capital into the crypto space. They wouldn't be unloading it. And if this on-ramp is plugged right now because of all of the banks that collapsed, like Silvergate, like Signature Bank and SVB or Silicon Valley Bank, the crypto space has got a lot of problems. And if market makers are moving out of the space, we've got a lot of problems. And if regulators are not coming in and giving us a regulatory framework, but are looking to shut down the entire industry, we've got a hell of a lot of problems. I don't mean to be too negative here, guys. I want to take it back. And I want to mention here that, if you are looking for the kind of optimistic spin here, I think that altcoins are going to probably, come down here and towards 150 billion, 125 billion. But that's still, roughly speaking, another 33% decline from where we're at now, give or take. We've got to be more particular, and we can't go all in with our capital. And we've got to be able to be smart and pick the plays that are really going to capture a lot of that upside if things start to move higher. And we need to have backup plans. We need to have stop losses. We need to be prepared if things don't work out our way to preserve our capital. It is so important. It is so imperative, guys. And to understand that capitulation takes longer than many people may think. Now, I want to ask of two things, guys. First off, if you did like this video, consider dropping a like. It's a great way you can support the channel. But for those of you who like this kind of analysis here, who like diving in deeper into the market, and you're wanting to know what kind of altcoins we're going to be buying, when we're going to be buying them, and when we're going to really get optimistic about the market, you guys can always check out the Dash report. Now, this is our newsletter here on the DataDash channel. And each month you are going to get a 20+ page report covering cryptocurrencies, commodities, stocks, and Forex. You guys are going to get the Dash Report discussion group where you can meet other Dash Report members. You'll get the alerts group. You'll get our momentum indicator that we utilize in so many videos. You guys will also get access towards the mid-month webinars. We can ask me questions. We're actually be doing one here today. If you guys want to subscribe early on, it'll be around 12 p.m. Eastern Standard Time. And we've got a lot of things that we offer within the Dash Report. It is a great way to get that additional analysis here. You'll get exclusive market updates, all jam-packed in, and you can get 20% off annualized at the link down below in the description. But this is something that, again, is going to help you guys get that cutting edge to know when we're actually making these moves. We give a lot of free content here on the channel. I wanted to show you guys some kind of price levels we're watching on some of these plays, but they may not be the altcoins that we end up putting our capital into. There's a lot of other smaller, mid-sized plays that aren't getting as much attention that I think are serving as serious market leaders. We know the signs how to spot those market leaders, and we're going to be trying to capture as much of that upside momentum if and when cryptocurrencies come back. But we're going to be waiting for those vital signs like stablecoin liquidity to get really exuberant on building long-term positions. Maybe we'll do some short-term trades, right? Maybe some short-term moves. But if you guys join the dashboard, if you guys watch the channel here, you guys will get a lot of good valuable insights towards when we're making those moves. So again, if you guys enjoyed this video, and if anything, consider dropping a like. I appreciate you guys giving me some time to ramble as always. It's such a privilege to be here with you guys on a good, beautiful Friday afternoon. I know it seems all doom and gloom, but I will be here during bull and bear markets. I will be here to tell you guys about what I think, honestly, and give you guys the clean-cut, dry opinion of mine. And I hope you guys have a wonderful rest of your day. Have a great weekend, and I will see you guys back here on the channel on Monday. Take care, everyone, and I'll talk to you all soon.